Hi, this is Garrison with Garrison Team Real Estate, and I'm here to talk to you with the July market update here specifically for the South Bay. So I'm going to jump right into it here, share my screen, current housing market, present, kaboom, July 2021. So, South Bay home stats. Once again, if you've been following this, nothing's really changing here. We did have a little more new listings here in June over May, which is a good sign. But we also have more pending and more sold, and the months of inventory hasn't changed. So still, we have way more demand than supply. So even if we get more listings, we're just gobbling them up. I mean, we have 1.5 months of inventory. So double the amount of inventory would still just bring us at three months, which is still a seller's market. So we need like more inventory and then more inventory and then probably more inventory in order to get to more of a normal market here. Median days on market is 7 rather than 8, and percentage of list price sold 102% over 103%, or this is the change between the two. So nothing too exciting here with regards to numbers month to month. We'll see as schools start back up. I don't expect any crazy inventory flush because nothing crazy is happening. And most buyers, many sellers, I say that I speak to, their number one concern is where am I going to move? So it's kind of a vicious cycle here with we don't get many listings and then we don't get more listings because everybody knows what market we're in right now, and it's a big risk. It's a big leap to take that risk in order to sell your home to purchase the next one. We have done it a couple of times. I myself have done it 3 times this year with some clients. We do take care of you and do it. However, it's an understandable risk. So the inventory levels. So nationally, we are seeing good things here. We are seeing inventory go up. Once again, though, I mean, it's nominal. It's going up, what, 60,000, which is 6%, on a million, I guess. So if you talk about that, we need double the inventory. Like we need something like 2 million to come out next month, and then we'd be at 3 months inventory. So it's all relative. It's going up, but that we have so much demand that doesn't really matter. Home sale forecasts. We all expect to have a lot more sales both the end of this year and next year because there's so much demand. All that demand needs to be satisfied, and it takes time to satisfy that much demand. And I've gone into previous home updates like this. I've shown the amount of folks that are turning 33 over the next couple of years, the most in history, and that's not changing still. So we will continue to have more and more and more demand over the next couple of years as more buyers become buying age, that magical number 33. So I put this in here because home equity cashed out by refinance. We did have a lot of refinances last year, and I think it's important to understand that many of those people, even though we did see cash out, raise over the past couple of years, it's not a crazy amount. Most people just lowered their interest rates and therefore lowered their payments. So we have a majority of the country having the lowest payments that we've ever had on $1 million loan, on a $2 million loan, $500,000 loan, just the lowest payments we've ever had at each number up and down the ladder in the history of the United States. Forecast for housing. So appreciation will begin to return to historical norms. I put this on here because I hear a lot, hey, I hear the market's getting slow. Is the market slowing? Something about the market slowing, blah, 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 market slowing, insert here. And I think it's important to realize that market slowing does not mean downturn in housing prices. We still have an incredible amount of demand and we still have almost no supply. So yes, it would be really nice if we get some more listings, therefore turn into a regular market, which is historically 3 to 5% appreciation, but that's still 3 to 5% appreciation. So I hope there are folks out there that aren't thinking that a market slowdown means that if they wait 3 months, property values will drop. That's not the case. It's just in the next 3 months, they'll grow at an 8.5% rate. And then a few months after that, they'll start growing at a 6% rate or a 4% rate. It's always growing. You're paying more the longer you wait. And then I put this on here just to show you with those previous stats of the 8.6 and the 5 and the 3. We've got, if you purchased a home at $1 million today at those growth rates, over the next 5 years, just on appreciation, you would gain $267,000 with those forecasts. I think those forecasts are low because the demand is going to be so high over the next 5 years. So I think if you buy a $1 million home today, you will actually make more than that in appreciation in the next 5 years. That's my opinion. We'll see what happens, but based upon the demand that we have and the lack of supply, that's what I see coming. And that is it. Told you it would be a really, really, really short one today. Thought I'd get through it really quick. I hope that was informational for you. I hope you enjoyed it. I'll see you next time. Hey, thank you so much for watching my video and on this channel. If you're on YouTube, please don't forget to like and subscribe so you get more videos like this and more videos that are South Bay specific on Redondo Beach and the rest of the South Bay. Also, you can find me at Sold by Garrison on both Facebook and Instagram. And you can also email me at garrison@soldbygarrison.com. I look forward to speaking with you in the future. Thanks again. I'll see you next time.